What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Remember, guys, the market is closed on Monday in observance of Washington's birthday, President's Day. So make sure you don't show up Monday morning all gung-ho ready to trade. There will be nothing moving. All right, let's take a look at Tesla here, starting with the intraday 1-minute chart. Now, the primary purpose of this video is to take a look at this from a day-to-day perspective, really looking at Tuesday. But I mean, listen, I'm a scalper at heart, and I need to start just by briefly looking at intraday opportunities that we can look for come Tuesday, potentially, to generate some revenue around a core position. Tesla is a name that I'm always watching. It's on my screen, my watch list screen, one of them, 24/7 all day while I'm sitting here trading. But let's just take a look here. So you can see here the stock was essentially flat on Friday, down 50 cents a share, 0.25% to the downside. Looking intraday here, you saw, we got this interesting volatility, dump, bounce, and then we really kind of just consolidated, a volatile consolidation, if that makes sense, for the remainder of the day. And two things. There are very particular setups intraday as far as scalps are concerned that, for example, the repeat offender setup that I'm not claiming to be the only one who trades that particular setup, but as far as I know, I developed that setup for my personal use, and that's one of the primary setups that I teach. I have found that setup to have significant edge, even if a stock is not technically in play, right? The setup itself is in play enough. And Tesla is a very common stock to find that setup on. But on, a different setup of mine, like the breathe and go setup, I recently taught a class on that. You need to see the stock itself in play. What is in play? Well, intraday requires a fresh news catalyst, perhaps a 1 or 2 day after earnings, the stock being 1 or 2 days after the earnings release. Ideally, elevated relative volume, that's a really big one. And, really, if it's pressing its ATR a wider range than is normal for the name, oftentimes that'll be on elevated R-vol, relative volume. And those stocks intraday, for the majority of setups, that I think you'll find yourself trading intraday if you do this long enough, they have significantly more edge on setups, or stocks more so, that are in play, okay? If you're just trading general chop, like, you take the best traders on the planet and you tell them, okay, you can only trade Tesla every single day. I know that's a really attractive proposition at first. You just think, well, I'll become an expert on this particular stock. Can it be done? Sure, but it's not going to have the best edge. If you take the best traders on the planet and you tell them that, and they say, okay, I can't select my tickers anymore, I just have to trade Tesla, I'm going to be honest with you guys, 99% of them are just going to lose money. These are the best traders in the world. So you say, okay, well, that's great. What does that have to do with Tesla? Well, I think it's important to know that contextually so we can take a look here. First of all, repeat offender setups, there were none on Tesla. The channel was just too wide for the realized volatility that we saw. But what really catches my eye is if we zoom in here, you can actually see here that we saw in a lot of worlds what many people would say is a breathe and go. You see this higher volume pull away, okay? Pull back on lower volume to that 9 EMA and go. That's a very common setup. I trade it a lot. It allows you to utilize, really tight risk with high potential reward. It's a great backbone scalp setup. That thing can make months for scalpers. That setup is a great setup. Again, I'm not claiming to be the only one to trade that, but it is one that I developed myself for my own personal use that I share now. And there were some setups here on Tesla on Friday, and I'm going to be looking at Tesla on Tuesday, but the reality is, guys, I have found through forward testing all of these setups that really one of the only ones that I can get away with trading stocks that are not necessarily in play is going to be the repeat offender, which is an entirely different setup. Like this breathe and go, for example, I couldn't even trade it on Tesla on Friday because the stock itself wasn't really in play intraday. That's okay. But it is a setup to watch if we see a day where Tesla is an in-play stock. Okay, let's move on now, because, that's a lot of scalping talk for this particular video. I promise I typically keep that a little bit shorter. But let's start getting contextual with Tesla on a day-to-day, from a day-to-day perspective, by looking at the 5-minute and taking a look at volume, okay? What we're really looking for is big changes in volume that correlate with big changes in stock price. You say, well, why do we care? Okay, well, the stock right now is around an incredibly important level. It's right around $200 a share. So I'm really interested in what a bigger market sample size is feeling about Tesla. Okay, if you see massive volume on dump-off candles and then tiny little volume on bounces, that's not necessarily what a bull would like to see, and vice versa for a bear. Okay, so if we look here, well, contextually, we have to be aware that we expect big volume off the open. This is not out of the ordinary, so we can kind of wash that candle. We move into the day, and really we saw pretty normal volume compared to time of day. Until we got to the close, you see the increased volume into power hour. That itself is very normal. But you saw a lineup of 3 green candles. However, the green candles, to me, this would be more meaningful if we saw like a 2 or 3 point pump in 15, 20 minutes. Remember, these are 5-minute candles. But we didn't. We just saw the increased buying volume. That's fine. Nothing really for me here, though, so let's move on. This is where things start to get really, really contextual as we head into this coming week, Tuesday. This is the 30-minute chart. These are our self-fulfilling prophecy psychological levels. The 50-period moving average, that white line, and the 200-period moving average, that gray line. You can see here that the 50-period is currently very much so in play on Tesla. From a bullish perspective, what am I watching as we head into Tuesday? Well, ideally, I want to see us get up and reclaim that 50-period as support, similar to how we were treating it the majority of the day on Friday. If you're a bear here looking at the 30-minute chart on Tesla, 2 things. Reject as hard as possible off the 50-period and head down toward that 200-period for a test, because really your ultimate goal is to get below that 200-period moving average. Let's take a look at the 4-hour chart now. You can see here that we're currently within a channel between the 200-period and the 50-period. That 200-period is currently sitting high, right at about $215 a share. That 50-period is coming up right at about $189, $190 a share. So here's what I'm watching on the 4-hour chart in particular. From a bullish perspective, I mean, listen, I know it's a little bit of a move away. It's a 7.76% move away upside to that 200-period, and we're looking at about a 5% move downside to that 50-period. But if we're bulls looking at this 4-hour chart, 2 things. We want to get up toward that 200-period as quickly as possible to break out of this little channel that's getting formed. It's actually kind of a wide channel between these two on the 4-hour. But ideally, you don't really want to go down and make a retest of that 50-period, at least ideally, right? So we would want that to come upside as quickly as possible, get some feet up underneath this move we saw in the last 2 trading days. If you're a bear, basically the exact opposite here. You would want to see this 200-period move downside as quickly as possible, and this 50-period staying low. Okay, creating that, I guess, gap or that difference between where the 50-period is and where the stock price is to create that psychological barrier for bulls that may exist that, hey, we're kind of floating on thin air when it comes to that 50-period. Just anything we can get in the mix if you're a bear here looking for this thing to go downside. But we are clearly at a very important level. Let's take a look at the most important chart of all. That's going to be the daily chart here. Okay, if we take a look here, you can see the 50-day up toward 221, the 200-day up toward 233, really not immediately relevant. Here on the daily chart, this is really obvious. We've been talking about this for weeks on Tesla here. By the way, if you guys appreciate these Tesla videos, I can do these each and every day if you'd like me to. Let me know in the comment section. But if you appreciate it and you get value out of this, please subscribe to the channel. It helps out tremendously. But looking forward here on Tuesday, if I'm a bull, all right, $200 a share is my number 1 priority. Just get above 2 and hold it. I don't care where we go from there. Ideally, higher is better, but just get above 2 and hold. And if you're a bear, it's easy. Reject as hard as possible off $200 a share and head back lower toward that 177.50 to 180 channel that was so incredibly relevant a couple of weeks ago. All right, let's take a look now and finish off with the options bias here in the chain. 3.57 million total contracts traded. Okay, look at this. This is crazy on Tesla here from Friday. This is all just from Friday. 2.48 million calls. 1.09 million puts. That is a tremendously call-heavy bias there. And if we get into the nitty-gritty here and we start looking at the actual time frames by looking at the delta ranges, the 0 to 20 delta range, 847,000 calls, 462,000 puts. Those are the short-term speculators. Heavy bullish bias. We look down at every other time frame via every other delta range. Also, all of them, short-term, mid-term, long-term, out of the money, at the money, in the money, and overall, all leaning bullish coming into Tuesday. As always around here, listen, the traders can be wrong. Make sure your risk is managed. Priority number one for us is always stay in the game, okay? Never let one trade take you out of the game. I promise you it's not worth it. Listen, if you guys find yourself, looking for some help, some direction, looking to expedite the process of becoming potentially a full-time or part-time trader, take a look at that first link in the pinned comment. Come join the Roensch Capital Gold server. I think you'll find it to be incredibly helpful, educational, and we have a great little community over there. Again, that first link. Appreciate you guys, and I'll see you in the next one.